Billions of dollars were still inside the company. Investors trusted it. Users trusted it. The world trusted it. And then, it all disappeared. This is the story of how one of the biggest crypto companies in the world went from a $32 billion empire to bankruptcy in less than a week. The company was called FTX. And its founder was seen as a genius. His name was Sam Bankman-Fried. He didn't look like a typical billionaire. Messy hair. Casual clothes. Soft voice. But behind that image was a company handling billions of dollars. FTX was a cryptocurrency exchange. A place where people could buy, sell, and trade digital assets. And it grew incredibly fast. Within just a few years, FTX became one of the largest crypto platforms in the world. Celebrities promoted it. Big investors backed it. Even governments paid attention. It seemed unstoppable. At its peak, FTX was valued at $32 billion. Sam Bankman-Fried was now one of the richest people in the world. But behind the scenes, something was very wrong. FTX wasn't just handling user money. It was using it. Secretly. The company had a close relationship with a trading firm called Alameda Research, also controlled by Sam Bankman-Fried. And that's where everything started to collapse. Customer funds were being moved. Billions of dollars. Without users knowing. Without permission. The risk kept growing. But no one outside the company knew. Until one day, everything changed. A report was leaked. It revealed that Alameda's finances were deeply connected to FTX. And that much of its value was based on a token created by FTX itself. This caused panic. Investors started pulling out. Users rushed to withdraw their money. In just days, billions of dollars left the platform. FTX couldn't handle it. It didn't have the funds. The company that once seemed unstoppable was now collapsing in real time. Withdrawals were frozen. Users couldn't access their money. Fear spread across the crypto world. Then came the final blow. FTX filed for bankruptcy. Just like that. It was over. Billions lost. Millions affected. Trust destroyed. Went from billionaire to facing serious legal consequences. The collapse of FTX shocked the world. But it also revealed something deeper. How fragile trust really is. And how quickly everything can fall apart when that trust is broken. This wasn't just a business failure. It was one of the biggest financial collapses in modern history. At first, everything looked legitimate. FTX had professional branding, clean interface, strong marketing. It felt like a safe place to invest. Millions of users trusted the platform. But trust was the only thing holding everything together. Behind the scenes, there were no clear boundaries. Customer funds. Company funds. They were being mixed. And that is one of the biggest mistakes any financial company can make. Research kept losing money. Bad trades. High-risk strategies. And instead of stopping, they needed more cash. That's when FTX became the solution. Money from users was quietly moved. Used to cover losses. Used to keep the system alive. But this wasn't sustainable. It was only a matter of time. Meanwhile, Sam Bankman-Fried kept growing his public image. He appeared in interviews, donated money to political campaigns, spoke about ethics and responsibility. He was seen as a good billionaire, someone who wanted to change the world. But inside the company, employees started noticing strange things. Systems that didn't make sense. Transactions that were hidden. Some people questioned it. But most stayed silent. Because everything still looked successful from the outside. Then came the turning point. A major competitor started raising concerns. That competitor was Binance. They announced they would sell their FTX tokens. This created panic in the market. Confidence started to collapse very fast. Users rushed to withdraw their money. billions of dollars, in just a few days. But FTX didn't have the money, because it had already been used. This triggered a liquidity crisis. And once that started, there was no way to stop it. FTX tried to find a solution. They reached out for help. Even Binance considered buying them. For a moment, it looked like the company could be saved. But after reviewing the situation, Binance walked away. The problems were too big. The hole was too deep. That was the final moment. From there, everything collapsed. In less than a week, FTX went from a global giant to complete bankruptcy. The crypto market reacted instantly. Prices dropped. Fear spread. And millions of people realized their money was gone. Some lost their savings. Some lost everything. The trust in crypto took a massive hit. And the damage went far beyond just one company. Today, the collapse of FTX is used as a warning. A reminder that even the biggest platforms can fall overnight. And that in finance, transparency is everything. Because once trust is broken, and there's no way back. Thanks for watching.